You work hard for your money. But when tax season comes, do you truly understand how much you owe and why? Most people don't. They rely on others, make mistakes, or overpay. In this video, I'll break down how to calculate your income tax step by step so you never get confused again. Income tax is money you pay to the government based on what you earn. The more you earn, the more you pay. But there's a system behind it. Governments use tax brackets. These brackets divide income into ranges, each with its own tax rate. For example, in some countries, income below a certain amount isn't taxed at all. Then it increases gradually for higher income ranges. So if your annual income is $50,000 and your country's tax rate is 10% for the first $20,000 and 20% for the next $30,000, your total tax isn't 20% of $50K, it's a mix. You pay 10% on the first $20K and 20% on the rest. Understanding this structure prevents overpaying. Your taxable income isn't your total salary. You must remove all deductions. Deductions include pension contributions, insurance premiums, business expenses, or donations. What's left after deductions is your taxable income. For example, if you earned $60,000 and you spent $5,000 on approved deductions, you'll be taxed only on $55,000. Once you know your taxable income, check your country's current tax table. Governments usually publish this online. Find which income range your taxable income falls under. That's your tax bracket. If your taxable income is $55,000 and the bracket says incomes between $50,000 and $70,000 are taxed at 20%, then your main rate is 20%. But remember, earlier portions of your income are taxed at lower rates. That's called a progressive tax system. Let's use simple numbers. First, $10,000 taxed at 10% equals $1,000. Next, $20,000 taxed at 15% equals $3,000. Remaining $25,000 taxed at 20% equals $5,000. Total tax equals $9,000. Always calculate each layer separately. Don't apply your top rate to your full income. This is where many people go wrong. Tax credits reduce your final bill directly. Unlike deductions that lower your income, credits reduce the tax you owe. For instance, if your total tax is $9,000 and you qualify for a $1,000 tax credit, you'll pay $8,000 instead. Credits often come from things like education expenses, home improvements, or dependents. After calculation, review your math. Use official forms or reliable online calculators. File your tax return before the deadline to avoid penalties. If your employer withholds tax monthly, compare their deductions with your own calculation to confirm accuracy. If there's a DAP, file for a refund or pay the balance. In short, keep all receipts of deductible expenses. Learn your country's tax calendar. Don't ignore small deductions, they add up. Double-check any online advice with official sources. Now you understand how to calculate your income tax from start to finish. No more confusion, no more guessing. If this video helped you, hit the subscribe button, share it with a friend, and I'll see you in the next one.